Welcome back, viewers. Today we will be testing the dynamic RSI indicator. But before we do, if you have not watched the first video on the channel and all the videos after that, you need to go do that now. Here at the Academy of Forex, we are building the best trading system possible as a team. And as a team, we will all profit from it when we are done. You can find a link to the first video down below in the description, and you should also see it pop up in the top corner right now. There is also a link down below to sign up for TradingView. You can save a little bit of money if you use the link below to sign up for your account. You can also find a link below to join us on Discord. Discord is a free group communication platform where we are having great discussions about all things to do with trading. Lastly, I get people who ask me if I can send them a list of all the winning indicators that we have discovered. If you are interested in receiving a list of all the indicators that we have tested, including the ones that we have discovered, but you are not interested in going back and watching all the videos from the beginning and all the way through to date, then what you can do is you can sign up for our Patreon. If you sign up for the $9 a month Patreon, then I will send you a list of all the indicators that we have tested to date. I also send out a updated list every week of all the indicators that we have tested up to that point. And if you are just interested in supporting the channel, there is a lower tier Patreon at about $3 a month that you can sign up for as well. So look for the Patreon link down below in the description to sign up for either of those. Alright, as I said, today we will be testing the dynamic RSI indicator. But before we do, I wanted to put the indicator scoreboard up for everyone to see. So to date, we have tested 216 indicators. And out of those 216 indicators, 83 of them have been winners, which means that they have met or exceeded the 60% win-loss ratio threshold that we have set for them. The best ones so far were able to achieve a 100% win rate. Now you need to go back and watch those videos to understand the context of how they were able to achieve that. But as we are working on building the best trading system possible, you can take any one of those 83 indicators and get out there and start potentially profitably trading the markets with them now. So go back and watch those videos, make a list of those indicators, and get out there and see what you can do with them. But stick with us here as we work on maximizing your trading profits. Alright, as I said, today's indicator is the dynamic RSI indicator. As you can see it here on the bottom of the screen, all in all, it is relatively simple. It is the RSI, a standard RSI. Well, I guess I shouldn't say a standard RSI, but it is the RSI indicator, the relative strength index indicator. And it has been tweaked and calculated differently to be dynamic, and so basically it adapts itself to the market. There's not a whole lot we need to know about the calculations as to how it functions. If you want to know more about that, obviously you can dig down into the code of the indicator itself. This is a TradingView member created indicator, and so of course you can find a link to it down below in the description. And on that page you can find the code that basically controls how the indicator functions, and you can dig into the code and play around with it, figure out the calculations and whatnot of how it works. But just like the RSI, basically what we are looking for is moments where the price action, or where the RSI, so we have the main oscillating line of the RSI, and we are looking for that line to break either below the oversold area or up above the overbought area. And then we are looking for corrections, and so we're looking for that line to come back in to the middle zone here. And so if we are going short, so if we have a signal to the downside, so if we have an RSI that has broke down across the bottom line in the oversold area, we are looking for that line to come back up the other side upwards across the bottom overbought zone, and or the oversold zone. I'm sorry. Let's try this again. So when the RSI line comes down and breaks below the oversold line, right here where my mouse is, you can see that it breaks down, gives us this green background to it. So it's broke down below the lower line, the oversold area, and we are looking for that line to then cross back up above that oversold line there. And then on the reverse side, when we are looking at the top side here, we are looking for it to go red. That means that it has broke up above the overbought area, the overbought line, the top line here, and then we are looking for it to break back down below that overbought line, and then we will take an entry short. If it was on the lower side and it was green, we would take an entry long. So green for long, red for short. Pretty simple setup there. Like I said, not a whole lot to it. Now what we will do is let's go ahead and get some support and resistance areas going, just so that way we have an idea. Let's see, is that the best place? Let's maybe go from here to there. I think that'll work a little bit better. Let's go ahead and do these. I'm actually going to mark these areas of support and resistance out with these orange lines on a little bit larger size, one step above the smallest. So if we look at this right here, you can see this is the skinniest line, went one step up. Just kind of makes those lines stand out a little bit more, but at the same time, I changed the color because sometimes when it's black, it just everything kind of blends in together, because all the dividing lines in every space is also black, and so yeah, just kind of the eye starts to get a little clustered when that happens. So there we have it. We have price action, we have support and resistance lines got mapped out here, and we will go ahead and start testing this and see what we can get out of it. We will keep an eye out for the support and resistance areas, kind of watch price action, see what's going on there. Let's check this here. Looks like don't know if that was quite a break. 66, let's see, 70. So it's right on the line, right on the 70 line right there. And it was December 31st. So this one right here, January 4th, is actually the moment that it crossed back into the area that we're looking for. It crossed back below the 70 line. And so we will go ahead and call that right here as the first signal, and we get to first take profit rather quickly. So that one worked out for us nicely. Let's go ahead and keep moving along here. And you see that price action has moved down and then has come back up, hitting this resistance area here. Then it rejected it again, coming back down to the support, and is now just kind of sitting in between these two areas of support and resistance. This is channel trading, basically, when price action starts to just consolidate sideways and starts to bounce between 2 points. Some people call it channel trading, some people call it consolidation, some people call it choppiness, ranging market, or countless names for it, depending on who is referring to what. And you can kind of trade this if you wanted to. It does definitely get more and more riskier when you are doing this. In theory, you would think, because it is bouncing between 2 points like this, that it kind of makes it a no-brainer type trade. Obviously, you would think that when it gets to the bottom line here, you go long. When it gets to the top line, you go short, and you just keep repeating the process until it doesn't follow that pattern anymore. But often you will find that the market makers will run stop hunts where they will blast through these lines for a bar, 2 or 3, and then immediately they will blast it back down. And so it may get you 1 or 2 reasonable trades, but it's definitely something to be cautious of. Let's go ahead and keep playing it out here. You see that down here below, we are in green territory, which means that we are now in the oversold area, and we had a break back over that area right here. Let's go ahead and play it forward a little bit more, see what happens. Looks like, unfortunately, this one, see, 60 pips there. Yeah, unfortunately, this one got us stopped out. Let's see. 105 is our stop. So on the next bar, it actually looks like, let me double check that one more time. No, not quite. Looks like this bar right here. The reason why I'm trying to be specific as to what bar it stopped us out is that if you follow down and look at the indicator down here again, you can see that it also gave us another signal right here on this candle. And so if we hadn't got stopped out by that point and we had gotten stopped out over here, then this candle or this signal here would be invalid because we'd have still been in the trade and not stopped out at that point. And so that's something you need to be mindful of when you're back testing, is where exactly did you get stopped out, and then look for any signals after that. So this one here stopped us out, and then we ended up stopped out on this one as well. And now that puts us back down into the oversold area on this big green bar right here. We get a spike. That big green bar spikes up, and you can see that on the RSI down here, it breaks back up above that lower oversold area. Got to get those right. Oversold and overbought. And so if we look at price action, we see that price action pushed down, bounced right off this level. Now keep in mind that these are just Fibonacci levels that we plotted off of here. We didn't even really designate these areas off of price action. I just simply drew a Fibonacci level from this point here up to this point here, and I just mapped out your most common Fibonacci levels, And that's what we're looking at now. And so it is fascinating to notice how price will respect these areas rather nicely. So you see that price pushed down here pretty quick, bounced right off this level, and then spiked right back up. And as it did again, we got a buy signal from our RSI down here, the dynamic RSI. And so now we have a combination of price action, support and resistance, and the RSI that we're currently testing, all telling us to go in this for a long trade. And if you notice, there we go, it works out really well in our favor. We end up getting ourselves to the first take profit rather nicely. Now, if you compare that to these areas over here, this losing trade and this losing trade, you can see that we came down and we bounced off this level, this support level here, came up, and we were right into a pretty decent Fibonacci resistance level to the upside right as we were taking long trades. So we were basically going headlong right into this resistance, this overhead resistance area. Compared to this one right here where the bar spiked up through the next resistance area, it actually closed up above it. And so at that point we basically had from this point here all the way up to this point here, so 116 pips to the next resistance area, giving us a lot of room for this trade to actually play out in our favor. Now, it doesn't always work that way, but those are things that you can be mindful of when taking trades and reading what your indicator is telling you you should be doing. Let's go ahead and keep playing this out. We are now down into the green zone again, and so we are oversold. So price action has pushed itself down rather nicely here. It hasn't quite come down and hit this area of support. It broke below this area of support right here and is now coming back up into it for resistance to the upside. So it'll be interesting to see if it breaks back above that, or if it hits it and rejects and continues downward. So it hit it, rejected it with a red candle. You see that wick of the red candle is up through that area of resistance to the upside. See if it continues. Yep, rejected it again. Came up with this green candle right here, hit it one more time, rejected it back to the downside. Now, once again, our RSI was giving us a signal right here, right going headlong into a resistance zone to the upside. Even though it was giving us a long signal, it obviously didn't work out in our favor, and once again we took a losing trade on that one. Now, is it definitely because of these support and resistance areas that it keeps losing every time it's going headlong into one? Maybe not, maybe so. We don't know, but what we know is that whatever is happening, it seems to be a pattern at this point. So anytime you can spot a pattern, that's something you need to pay attention to. After all, what else are we doing when we are testing indicators but looking for patterns in price action to then give us an edge later on when we are looking to what price action is going to do in the future, right? And so an indicator is basically just developing a pattern that we follow every single time it does this, we do that. And right now we have 3 instances where we hit right into resistance to the upside, taking long positions, taking long trades off our indicator, and each one has failed. Both times that we took a position, this one was short, this one was long, Both times that we took a position when we had just crossed right over a support resistance line and we weren't running straight into one, we had a winning trade. And so you have to be mindful of these things, even if you don't believe in them, to make sure that you're giving yourself an edge. So we get green for here, just a second, and we get a long signal right here. We are beyond this area of support. Technically, we came down, we broke through it, and it became resistance, but then we broke back up above, and so now we're beyond it, and we have this whole space up to this next level up here for this trade to play out. Now, will it continue up? We don't know. It may not, it may go down, but we'll see. Let's follow it through and see what happens. All right, so let's do some measuring here. See if we got ourselves to, what are we looking for? 70 pips. Ooh, that was close, but not quite. Let's measure to the downside and see if it got us stopped out. 133 to the downside, 105 is our stop. And so in this particular case, we would have gotten stopped out. And so you see that it doesn't seem to be respecting this line very well. Seems to be just kind of trading below it, and it just keeps breaking up and down through it. And so that's something to be mindful of as well. All right, what do we have here? So this RSI, because it is a dynamic RSI, you can see that it kind of does this weird area right here where it stretches, but it's really hard to see what is going on with it being able to cross. And so it did actually cross the RSI, crossed back under, even though it doesn't really look like it because it's stretching up so far like this. It looks like everything just moved up, but it did for just a moment. If we were to flatten this out, we definitely had a cross for just a moment to the downside right about here. And so it gave us a short signal right there, and oddly enough, it was able to get to take profit on this really long bar that came down for us, getting us a win. And then almost immediately it calls another trade right here to the downside, right there. Let's go ahead and play this out and see what happens. That one did not work out for us. That one would have gotten us stopped out, and now we're back up into the overbought area, up into the red area. We've seen that price action has moved rather nicely up here. We're running right into this zone where, if we look back, we had lots of rejections this area, and so we can probably anticipate that price action is going to have another interaction or reaction to this area. Let's go ahead and play it out and see what happens. So it didn't get quite as high before it started to reject, but it did reject nonetheless. And got us to take profit, it appears. Yep, 99 pips. Got 99 problems. All right, keep moving along here. And we are now down into the oversold zone. Let's keep an eye on our indicator to see what it's doing. Looks like we get, for just a moment, a jump to the upside. Let's Let's measure this out. We have not quite got stopped out. We have not quite gotten stopped out yet. So let's go ahead, play this one forward, and we actually end up winning, getting a winning trade out of that one. It was really close. I mean, like 2 or 3 pips from hitting our stop there. And so now it came up again. We're right back up here into this area where we have touched here, touched with a wick here, touched with this here, and touched with this now here. So we've hit this level multiple times in the past recently, and each time it's had a rejection to the downside, and we are getting a signal to go short right here. Let's see if we can get another winning trade out of that. Everything's kind of lined up nicely. Let's see what happens. Oh, price action is really hesitant. So let's go ahead and measure that out, because I believe we did hit take profit here to there. Yep, we did. We got to our 70 pips. So we got to it. I was hoping for a little bit better of a push to the downside, but a win is a win either way. Back up into the red zone now, and we get a cross down right here. Looks like we got stopped out, unfortunately, on that massive wick that took place. This wick, this candle right here, it's unfortunate because it came up, stopped us out. It hit about 150 pips on that wick right there. Big old long wick. Then it rejected it and went down in the direction we wanted it to go in the first place. That is always heartbreaking when that happens, because that would have been a really decent trade to ride down. Now we're in the green zone here. We're running headlong right into the support area. Let's see if it holds it. Gives us a signal to go long right there. We're really close to running into this overhead area of support. Let's go ahead and see what happens. Yep, as I suspected, it came up, hit that area, reacted to it strongly, but we were able to squeeze out our 70 pips before it started to reject that area. And now we're back into the green zone. We get a cross right there. Let's go ahead and play it out. And that one did not work out in our favor. Back down into the green zone one more time. And we get a cross right there. We are butting right up to overhead support. Not a great place to be entering in on a long, but let's go ahead and play it out and see what happens. And it looks like it stops us out. Let's measure that out, but I'm pretty sure. Nope, that's, oh, it's close, but not quite yet. Keep playing it out here. It eventually creeps its way up and gets us the first take profit. So there we have it. That is the dynamic RSI. Let's go ahead and add these up and see what we get out of them. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and 15. So we have 15 trading signals altogether, and we have 1, 2, 3, 4, 5, 6, 7, 8 winning trades. So unfortunately, that is not going to meet the 60% criteria that we are looking for. It's interesting because the normal RSI, the original RSI, I do believe I'd have to go back and look, but if memory serves me correctly, way back there, about 100, 200 indicators back, I believe the standard RSI actually met the 60% criteria. So, just something to keep in mind. This one's going to go on the no list, and we'll move on to the next indicator from here. If you have not already, like this video, share this video, comment below, and subscribe to the channel. Also turn on the bell notification so that way you are notified anytime I post a new video. So that way you know what indicators we have tested and are testing. Also, there is a link down below to join our Discord server, which is a free group communication platform where we discuss all things trading related. There is also a link down below to TradingView, and if you use that link to TradingView to sign up for an account, you will save a little bit of money. And lastly, there is a link down below to sign up for Patreon. Please sign up for the Patreon and support the channel the best way you can.